Japan's currency had fallen to its weakest level in nearly 40 years. So, the US and Japan did something they had not done together in almost 3 decades. The two countries stepped into the foreign exchange market to support the Japanese yen after it slid to around 163 yen per US dollar, its weakest level since 1986. So what exactly happened? Japan's Ministry of Finance, supported by the US Treasury Department, entered the currency market. Together, they bought Japanese yen and sold US dollars. The move helped the yen recover sharply to around 156 per US dollar. This is known as currency intervention, when governments or central banks buy or sell currencies to influence their value. In this case, buying yen increased demand for the currency, helping strengthen it. But why was the yen under so much pressure? The biggest reason was the wide gap in interest rates between Japan and the United States. The US has kept interest rates relatively high, attracting global investors seeking better returns. Japan, despite raising its benchmark interest rate to 1%, still has much lower borrowing costs. That encouraged investors to borrow cheaply in yen and invest in higher-yielding assets overseas, especially in the US. As more investors sold yen to buy dollars, the Japanese currency weakened further. A weaker yen also made imports more expensive, adding to inflationary pressures in Japan. Concerns over Japan's public finances added to the pressure after the government announced a temporary cut in sales tax on food and soft drinks to ease the cost of living. So why did the US support the move? The US said the objective was to prevent excessive volatility in global currency markets. President Donald Trump also defended the intervention, calling it good for the world economy. A weaker US dollar could also make American exports more competitive, giving Washington an additional incentive to support a stronger yen. The bigger story, however, is how unusual this intervention was. Japan has intervened in currency markets before, but coordinated action with the United States is exceptionally rare. It highlights the growing concern over sharp moves in one of the world's most important currencies. Markets will now be watching whether this intervention is enough to stabilize the yen or whether Japan will need to raise interest rates further to support its currency. Follow Business Standard for more such stories.